Hello guys, today I want us to talk about the role of execution in your trading. Now this is something I've been reflecting on in the last couple of days, and execution is one of those things which is just as important as having the profitable strategy, because when you have the profitable strategy, it goes hand in hand with your executional skills for you to be able to implement it as effectively as possible. In other words, if you have a profitable strategy but you can't execute it perfectly, then your results will still be poor, right? Now it's because of these reasons that you find many traders who have a very profitable strategy, and maybe it's a system you built yourself, or let's say you are under someone's mentorship who has a profitable strategy and you've learned from them and you've tested it out and you see it's working. However, when you go to the real markets, your results are not reflecting the same thing that the backtest data shows. And it's one of the most frustrating places you can be as a trader, where your system is profitable according to the backtest data, or let's say you're even trading the same strategy with other people and you can see that they are having nice results, but for some reason, because of poor execution, your results is not similar to them. This is one of the reasons as to why, even if I give you my profitable strategy, but you have poor execution, you still won't be able to reflect the same results. So as a trader, you have to get to a point where you understand the importance of execution to a degree that you know, if I don't execute well, it doesn't matter how good my strategy is, because I still won't be able to have any nice results in the markets. So there are a couple of things or reasons that could cause you to have poor execution. One of them could be a psychology problem. And by a psychology problem, it simply means your setup present themselves in the markets, but because you have fear or maybe you are greedy, you end up either missing out on the trade, ignoring the setup, or you take it with slightly a bigger risk because you are greedy and you're trying to make too much money. Then in the long run, it destroys your risk to reward ratio. Or maybe if you didn't take it, you end up not having that profit reflecting in your P&L statement. So in one way or the other, psychology could be a reason as to why your execution is not as good. And this causes a mismatch between your backtested data versus your actual performance in the market. Another reason why you have poor execution could be something to just do with your indisciplined maybe behavior as an individual. Like we say every time, you need to treat your trading as a business. So let's say it's a normal trading day for you, and instead of you trying to watch out and wait for your setups, you just find yourself lazing around, then the setup happens and you miss it and then you notice it later. So this is just something to do with your character and your discipline as an individual, which could be making you miss out on trades or even taking bad trades. And the final reason as to why your executional skills could be bad is because you've not yet been in full synchrony with the type of markets you are trading. So sometimes you can miss setups genuinely, not because you wanted to miss them, but because it happened in front of you, but somehow you just didn't see it while the setup was forming. Then after the market has already moved, you come back in the evening and you notice, oh, there was actually a setup here today. This is something that happened to me before, especially in my early trading years, where I knew what I was supposed to look for in the market, but because of just maybe poor analytical skills and not being very much in synchrony with the markets and understanding the type of setup you're looking for very, very well, it happens and then I notice it later. So now that we have this breakdown, let's try to see how you can improve and sharpen your executional skills, because whether you like it or not, your success as a trader is dependent on two things. Number one, your profitable strategy, meaning you have to test it out and develop a model that has proof of concept. You should be able to see over the years that the strategy you're using is profitable and can actually make money in the market. But number two, even if you have that, trading is one of those fields where, apart from just having the strategy, it's also dependent very much on the individual who's executing or trying to implement that strategy in the market. So that being said, you want to sharpen your executional skills and do anything possible to make sure your actual results in the market are similar to what your backtested data is showing. So there are a couple of ways you can go around to make sure your executional skills are as effective as possible. And the first one boils down to you understanding your market very, very well. The reason why sometimes a setup is happening in front of you, then you come to notice later, but you didn't see it real time, is because you've not taken a lot of time to practice and master that type of setup. So what you want to do is take a lot of time to test out the markets you are trading, study their price action over and over, journal, record, where possible screenshot how your setups are happening, such that when you see it in the market, it's very easy for you to spot them on time. You actually know you're a good trader when you can tell a setup is about to form, sometimes even before it completes. So like for me, I have a couple of things I'm looking for before I execute, but I can tell you for free, usually by the time one or two candles are formed, I'm already anticipating a potential setup. And sometimes it may not happen, sometimes the setup might complete and respect everything that I'm looking for. And you can only get to this level because you've studied your markets very, very well and you've mastered the type of setups you're looking for. Now, as you do this, I'll obviously recommend that you document these into a playbook, because the playbook will help you understand, when I see this type of price action, I'm expecting the market to do A or B. Now, if you have 2 or 3 types of entry models, it's very necessary to have a very defined playbook that shows you, this is my model A for entry, my model B, my model C, something like that. And where possible, you want to take the screenshots so that you understand, whenever I see this pattern, this price action, it means that I'm expecting A or B to happen. So this will just help you to make sure you are very much in sync with the markets, so that you don't find opportunities happening, then you miss them just because you didn't have the best analytical skills. Before we continue, let me introduce you to Prop Farm Match. This is the place where you find data across different farms. Before you buy that Prop Farm challenge, you want to be aware of the trading conditions in terms of the spread, slippage. You want to be aware of the trading rules. This is where Prop Farm Match comes in. They offer detailed information across different farms. You can compare to see the prices, the types of challenges, whether it's a 1 or 2 step. You can check reviews from verified traders who have done payouts. If you're looking for a farm with discounts, you will find them listed with the best offers. And most importantly, you can customize your trading challenge until you find the company that suits you. For example, maybe you want a 1-step challenge, a company that allows crypto trading, allows news trading, weekend holding. You can customize all these things on their website and you find a list of the best farms. Be sure to visit Prop Farm Match. The links will be in the video description. Otherwise, let's get back into the video. The second and probably most effective way that I've used to make sure my execution is as effective as possible and I don't find myself missing trades is building a strategy around a model that is repeatable. Now, not every trader applies this. Obviously, we have traders who have 3 or 4 types of entry strategies, but for me, I've found a lot of success with having the same entry strategy that is repeatable over and over. So that means how I look for that buy or sell setup will be the same almost every time. Like for the last almost 1.5 years, close to 2 years now, I've been looking for the same types of setups over and over. Nothing much has changed in my playbook, right? And this makes it very easy for my eyes to master the type of entry that I'm looking for in the markets. So the problem with having 3 or 4 entry models is that sometimes it can confuse you. It can also affect your psychology. So in the market, you see an entry, but you find yourself confused because you have 2 or 3 types of strategies that you are applying at the same time. And sometimes you might even find they're contradicting each other. So model A is telling you it's good to buy, model B is telling you you need to maybe wait for 1 or 2 things before it can be a very valid setup. There are traders who have, I don't know, an A plus setup, a B setup, something like that, meaning they have ranked the types of setup that they take from the best to maybe average or the worst. Well, for me, as I've built my strategy, I believe every setup that I take is an A plus setup. So again, this is not something that every trader applies. I'm not saying you have to copy this. I'm just sharing with you my approach, and maybe you can pick 1 or 2 things from that. So I don't have setups which I have categorized so far as one being better than the other. All my setups are the same, because as I backtested them, if I just keep repeating that same entry criteria over every 4 or 5 trades, at least I have an edge. The worst losing streak I've had in the last close to 2 years is a 3-trade losing streak. That means out of every 5 trades, with a risk to reward of 1:3, I always have an edge out of every 5 trades. That means I'm almost certain out of every 5 trades I take, I'll have an edge in them. Meaning out of every 5 trades, if I add up both the losers and the winners, I'll still have made some money or some profit in those types of trades. So building a model around a setup that is repeatable makes it very easy for your eyes to spot it over and over. Because when you see the price action forming, already you can anticipate what you're expecting the market to do. So you start to prepare yourself as you anticipate your setup. So it's very difficult for me to find a setup that formed and I missed it because I didn't see the price action forming. In fact, every setup I've missed is usually because of just maybe, I'll call that poor trading behavior, where maybe I was not looking at my charts. Then the setup happened without me seeing. But it's very difficult for a setup to happen when I'm looking at my screen, then I can't spot it, because I've been trading the same model for about 2 years, which makes it as simple as possible for me to spot the same opportunities over and over. The advantage of trading the same model, it also gives you a lot of confidence. There is nothing as bad, in my opinion, as you have 3 strategies then you've taken a loss on strategy 1, a loss on strategy 2, maybe another loss on strategy 3. So even when you find your next trade, I think it's very confusing because you're mixing too many things, because our minds can only process too much at the same time with ease. So when you start to confuse yourself here with too many entries, you find yourself really making mistakes easily. So do your best to focus on only one model that is repeatable over and over in the markets. The third and final thing you want to do is to make sure your entries are as practical as possible. And I've given this example before. Don't build a system that tells you to take setups at 1 a.m. if you know very well you won't be awake by 1 a.m. So you find yourself you're not executing well because you missed a trade because you were sleeping. Maybe you were tired, you were fatigued. Then a setup happened overnight and you miss it. So only take setups that are within a very realistic time window that you can find over and over, such that you can take them repeatedly without missing any of them. Under practicality, we've talked about the time window. The next thing I'll tell you about the practicality of your trades is in terms of the trade frequency. Now, sometimes the more the trades you are taking, the more likely you are to make mistakes. For instance, a trader who is executing only once or twice a week, there is a high chance they'll have a low probability of missing trades as compared to one who's taking 5 to 10 trades on a daily basis. Because if you're taking 5 to 10 trades on a daily basis, it requires a lot of focus. It probably needs you to be on your chart for a long period of time. It requires you to have very strong psychology. Because if you execute 10 trades in a day, then let's say it's a bad day and you start your first 4 trades with a loss. So you've taken 1, 2, 3, 4 losses in a row. There's a high chance by the time you're getting to your 5th trade, your psychology is really messed up. And maybe the 5th and 6th trade might even be a winner, but because already you've been taking many trades within the same day and they've gone against you, you might find yourself wanting to be a little bit laid back, and then you don't take the trade. And sometimes the trade you miss is the one that actually ends up recovering the losses. So to make sure your psychology is in check, you want to make sure your trade frequency matches your trading personality. And this is something many traders don't understand. Just because a strategy is giving you many trades and is giving you more percentages doesn't mean you have to trade it, because it might be giving you 10 trades a day and it maybe makes 10% a month, but your personality doesn't match with the level of psychology required for you to trade that style. On the other hand, you might be having your own strategy which just gives you maybe 3 or 4% a month, but because of less trade frequency, you are able to handle your psychology very well and have that consistent performance. So many traders have a system that is making for them 3-4% a month, maybe 5%, and they don't understand that the reason why they can make that money is because it also suits their personality. Then you try to switch to a different strategy because it's making double your returns. But when you switch, you now notice you have to execute 3 or 4 times what you were doing before. And now that is the psychology level that maybe you've not built yourself enough to be able to handle. So what happens? You end up missing trades, you are affected badly, and long run, the strategy that should be making you double returns ends up losing more for you because you didn't have the level of psychology for you to be taking those 10 trades a day. So you'd rather stick to the one that your personality suits as long as it can make for you consistent returns. So long story short, make sure you have a trade frequency that is practical enough for you to not miss out on trades. Someone like me who is executing only 4 to 5 trades a month, that's an average of about 1 trade a week. So from Monday to Friday, there's a high chance I'll only be in the market 1 day, sometimes twice. Of course, it just depends. But you see, this gives me enough time and enough room to prepare and anticipate for my setups. So by the time my setup is coming, maybe on a Thursday or on a Wednesday, I've had enough time to wait for it, to look for my conditions. So it's very difficult for me to miss a trade after I've been waiting for it for a whole week. But you can't say the same if you're taking 10 trades in a day. So that brings me to the end of this video. Basically, I just wanted to help you understand that sometimes you might be thinking all you need is a strategy, but maybe you have it and what you are lacking is the proper executional skills. So you need to assess yourself as a trader and check on what you can do amongst what I've mentioned in terms of having a model that is repeatable, in terms of testing your markets to understand and making sure you are in synchrony with them so that you can see your setups with ease without struggling. And lastly, making sure you are very practical in terms of the trading hours so that setups don't happen overnight. And again, making sure you're very practical with your trade frequency. Build a system that has a trade frequency which can suit your personality so that you're not scared when you start having 10 trades in a day and you start losing and you can't handle yourself well, and then you end up missing the rest of the trades. So when you apply all these 3 things effectively, they'll assist you to make sure your execution is as accurate as possible. And if your execution is accurate and your strategy is profitable, then there's nothing else that will not make you make money in the markets consistently. So as I end the video, just remember that your profitable strategy means nothing if it can't be executed with utmost precision. So I hope you've picked one or two things from this video. Until next time, guys, peace out.